Markets around the world are melting up, and big tech earnings has just kicked off with a bang, 8% up with Netflix stock rising to $534 plus after hours. But there is one question that still remains, and it's all about one of the most important Magnificent Seven stocks, Tesla. Can it buck something that it's been doing for a while and get back on the growth trend? Today we'll discuss the number one question, and more importantly, we'll be looking at a decade-long sell-off that could be about to change. What is it, and why is it so important to all of us as traders in 2024? Let's take a look at it together right now. Well, welcome back everybody to one of the biggest daily shows on the internet to do with everything macro, leading indicators, and the hottest charts. We cover stocks, commodities, and cryptos daily, and if you love any of those markets like we do, remember to subscribe and smash that like button. It was a bit of a sideways day for the markets, but we've got some great data coming in, and let's go through some of that right now. What about new highs? Do they tend to happen in clusters? Well, the answer is quite simply yes, and this could be the beginning of what many people call the business cycle. It goes between 3 and 7 years, and it does tend to lead through with SPY new all-time highs. As you'll notice in the past, when we tend to go into new all-time high periods, they don't usually become outliers. However, there was one, of course, in 2007. So why is this important? Well, it brings us into some stats that we've been talking about recently. But just in terms of the sell-off itself, you might have thought 500 days was really large in terms of how long it took to get back to a new all-time high. As it turns out, in bigger sells, we tend to see some brutalization of these major indices, including the S&P 500. So in the scheme of things, it's not that big, but it certainly is the biggest we've seen in over a decade. Now let's go through why this is so important to consider. And one of them has to do with one of the better statistics that we get each year, which is the TOI 2-month presented by Wayne Whaley. And you'll notice here that we have a 35-2 track record between November and January in terms of the 2 months, and over the year in terms of the stats themselves. 35-2 is not bad from the up-down percentage, and there are some months that we want to be looking at outliers, particularly April this year, which will be probably the most important month across the board. Some other things you want to be considering is what happens in Q1. Now, we've talked about Q1 a few times, and we've also been talking about what could trigger a potential sell here in markets. Now, one thing's for sure, CTAs are super overbought. And here's a chart showing you that the CTAs get super overbought, and sometimes when they start to reduce their position is when you want to be concerned. Now, because we're off the charts at this time, we are looking for updates, and I've got an update for you here, which shows that CTAs have started to slow down, not purchasing at a faster rate, but still they're relatively stagnant. So could markets go up higher? Yes, from this statistic alone, they certainly can, but we will be monitoring it, so make sure to subscribe for those particular bits of information. Another one, just in terms of history books, is we've never seen the S&P 500 make a new all-time high while the Russell was over 20% down. And this is showing that really the biggest companies in the world are absolutely taking over. And obviously this is being driven specifically by Microsoft, Nvidia, and AI stocks across. So where are the opportunities in 2024? Well, we've been talking about the idea of capitulation, basically a brutal sell-off that's been hitting the Hang Seng Index and anything to do with Chinese stocks over the last week. Guess what? We saw some reprieve over the last 24 hours. And of course, we're starting to get information coming out that says that there could be some bailout plans on the horizon, if not already starting to get implemented. So why is this important? Well, of course, it's got to do with this 2-week stat. Now, we first brought up this chart over a week ago, and basically what it was telling us was that markets should be considered as a flash crash at this point with potential turnarounds over the next 3 to 6 months, at least statistically likely. Now, why does this become important? Well, here is a chart here between divergence of the S&P 500 making new all-time highs and, of course, where we see ourselves with the China index across the board. And this is a mixture of China plus Hong Kong stocks. So why is this all important? Well, because then there is opportunity potentially in oversold stocks. We already talked about Morgan Stanley obviously downgrading China, how they did that in 2023. The last 4 times they did that, the year after was actually bullish. Now, that was the year after, doesn't mean the month after. But even during times of, let's say, GDP weakness, could the market actually grow? The answer is quite simply yes, it can. And partially it's because that it's oversold. And I think we can all agree that their market is oversold on many fundamentals. Now, that doesn't mean it's cheap. That doesn't mean it's good. Picking bottoms obviously is incredibly difficult, but I think this is the year that really could stand out for this particular market. And some of the reasons why have to do with everybody kind of going super negative on what we've been seeing across the board. You'll notice that China real estate kind of crescendoed near the end of 2023 to 24 as being one of the biggest black swan events that everybody thought around the world was going to crash the market. Now, historically, whenever you see everybody agree with something, it usually doesn't happen. And of course, a classic of this so far has been US commercial real estate, which no doubt is in big trouble, but obviously has not crashed this market at this stage. US shadow banking as well is now becoming the new talked about topic in terms of at the rise of what's going on. This is private credit, and I expect this to be a big discussion in 2024 with a huge amount of zombie companies starting to go bankrupt. Now, do remember, whenever you look at those bankruptcy stats, which I'm sure we'll have on the show throughout the year, you're going to see a lot less bankruptcies in certain years. In fact, historically lower bankruptcies, 2021, etc. And this could be playing catch up. Now, the Federal Reserve knows this, and there will be many companies that go bust over the next 12 months. At the same time, it's not necessarily going to be a problem for markets. Of course, it's known and people are semi-expecting it. What we're looking for here is price action and things that might be in clear sight, which they often are, but at the same time haven't actually affected the markets just yet. So we'll be watching. Price action will be the key. So let's take a look here at small caps. Now, of course, small caps typically outperform large caps after US corporate profit growth troughs. So this is an interesting one in terms of where we're at and what we're tending to see here. The stats aren't exceptionally good. We've talked about small caps a bit in December last year, and so far they rallied really well till January. Then they start to sell again, but there might be an opportunity coming up. We'll talk about it later on today's show. So let's now take a look at some stats that really break or make the market often in January, and this has to do with our Q1 discussion, which is that if we're going to see weakness, Q1 and Q3 are generally where we expect to see it this year. And of course, the stats are pointing towards over the next 2 months being up, down, and a bit bumpy. Now, why is this important? Well, of course, it's an election year, and they tend to trade a little bit differently. Here's a great one from Almanac Trader, which shows you all election years, which often see sells through that Feb into March period. And then we also get potentially an open field area where we actually have a more ridiculous market at the start of the year. Now, this is not the way the market's trading right now. You can see that it dropped kind of in line with an open field, and then it's rallied back up. Now, this is not necessarily exactly a predictor, but what you can see is that if troubles are going to happen, they tend to happen in the first quarter or the third quarter to fourth quarter of the year. So this is where you tend to see that kind of weakness come into the markets, not usually from April onwards. And that could be an insight that we're looking for on the charts. Let's talk about why the day was boring. And a lot of it had to do with options. Basically, there were no clear option reads, in my opinion. And you could almost say it was like balancing on, I guess, a needle or something in terms of what the market was doing from a gamma perspective. I did have a Goldman Sachs chart that I was going to put in today's video, which basically just showed that it was perfectly neutral for the day. So we'll keep bringing that up, but there was nothing there to do in terms of options moving the markets. What we do know, though, is if we clear some levels, there are obvious levels to go to next. And one of the big zones to be cleared moving forward is going to be 4,900. I would expect a lot of activity over that, and it will act as some form of price action resistance, you would think, at this point. We're getting closer and closer to it. We're about 30 points off it at the time of this recording, but 4,900 is going to be a big resistance level. If we clear that zone, we open up 4,950 and 5,000, and they're the most likely next areas. And of course, we'll be reporting on it if it happens, but 5K, I could see the market stop just before that and possibly get that mean reversion in. Remember, Q1, it's going to be volatile. I'm sure there's going to be something coming up. So what about earnings? Well, as we know, Mag 7 is all important, and the first one kicks off very soon, which is Tesla. So Tesla is going to come in, and we'll find out whether it can perform as well as maybe a Netflix has. Of course, everyone's question is really down to one thing. We want the Model 2. Where is our M2? We need Model 2 because they're all looking for growth. So if the M2 is announced or something happens during this particular earnings, then I would say the stock may do okay. If it isn't, then it could get kind of brutal. And a lot of that has to do with what we're seeing here from the options market. Now, the options market predicted a plus or minus 8% movement on Netflix. Funnily enough, it was plus 8%. They did pretty well. Now, what do they think about Tesla? It's a plus or minus 7% move. So, of course, Tesla could either move down 7 or move up 7. 7 up would bring it into a big resistance, and 7 down would obviously give us some great levels, which we'll discuss very, very soon together. What about unusual activity? Well, as we mentioned, Chinese stocks actually did get some large trades on them with exchange-traded funds. Then about a day or two later, there was speculation over, I think it was the bailout, which is like about $250 billion or something like that. And all of a sudden, we saw a little squeeze come in over the last 24 hours in terms of Chinese stocks as they have capitulated to almost new lows across some of these major markets. Another one that just came in out of nowhere was home builders. And as you would know, if you've been watching this channel for a while, we look at home construction ETFs and home builders as a positive or negative sign for often the market. It was what got us out in 2022, and it might be what is going to bring us down here in 2024. So watch home builders. It's an important one. And of course, we've just seen a huge result from it. Let's now move over to the charts, and we'll start off here with the S&P 500 and really central bank liquidity, which did drop recently and is now stabilized. Both World Central Bank and the US central bankers are kind of leaving liquidity, it looks like, around the same level in terms of the metrics we follow. 4.2 was hit on US 10-year, and it's now picking back up. Obviously, the higher this goes, the more pressure that could come on the stock market. And we hit what we call mean reversion, which is a weekly 20-moving average on the charts. Let's move over to treasuries. This means that 93, 94 zone that we spoke about for a long time is still being potentially accumulated. And some of you will see this as an inverse head and shoulders, with obviously a nice pickup here in treasuries to open up the idea of maybe even a 110 later on in the year. We are very open to this being a pretty good period for, of course, treasuries. The reason is because we might be going into weakness. The Federal Reserve is going to pivot. We know that. It's just a matter of what timing. And then, of course, we've seen huge volumes. And we know that people like Bill Ackman, who have been pretty decent at trading some of these nice positionals, have also reduced their hedges off and obviously gone long down in these prices down here. And we spoke about that late last year in terms of being a key level. Let's now move over to our bond indicator. Another day of weakness. No really big notables here, but certainly market itself starting to show some internals of slowing down. Dow Jones Transportation Average also showing some signs of weakness, but probably home builders was the biggest weakness. And you'll notice here we have 1, 2, and 3 highs. Now, a lot of the time, these are where I start to get very cautious. I already mentioned last week that I thought that home builders had done a little bit of a change of trend. But a lot of the time when you're trying to stop a freight train, and this was a freight train, I mean, it went from 69 all the way to 96, probably one of the better returns. In fact, many ways better than any of the stocks that we've been looking at, including semis and everything like that. You're getting a 40% return, and it's going to be hard to stop that without doing some kind of Wyckoff distribution. So this could be the beginning of that. Of course, we've got an alert here at 90.96. It's hard sometimes to see Wyckoff distribution. I certainly wouldn't be bullish on this particular chart anymore. I'm neutral to bearish on it, and that's just the way I feel about it. And whether that actually goes down or not, or whether it's even a trading opportunity, you might feel like it's pretty good. I'd say you'd have to wait for a little bit more. But it looks reminiscent almost of something like Bitcoin recently that we've seen on the charts. Let's now move over to the US dollar. Nice rise in dollar and a new closure high in terms of what's going on here with the US dollar index. So you can see that we're on our way to 103.80, 104. We first started talking about that here, and obviously we're on the way. So some movement in currencies, kind of going with yields, pointing towards potentially higher yields, at least on things like the US 10-year and 2-year moving forward over the next couple of days, if it can hold up and move higher. Now, this has led to gold, as in gold spot, actually starting to weaken. And of course, it's just trading around this most traded zone. For now, the buyers sit around 2015, the sellers obviously at $2,034. I don't really like gold spot, but I do like gold stocks, and they came out pretty well over the last 24 hours. This is one I was talking about in our Market Masters Club. Links in the description if you're interested. And this is a pretty big deal. So basically, a nice little island reversal beginning here on gold stock. Whether it's going to hold through, we'll find out. does tend to do it quite a lot, this particular market, and it's been pretty brutally oversold. So 32 all the way down to 28. Remember, gold stock's been underperforming gold for a very long time. Could it be a turn? It's something we're looking at on the charts. US oil as well held that 74 plus a barrel. It fell off, found a couple of buyers, came back up here, and at the time of this recording, it's at 74.40. I'd really like to see it clear this 75 zone so we can move up potentially to 78. And that is all after that trend line got breached out. Obviously, we want to get above this high wick as well so we can show. But there are some good signs. Little wick rejection here. Oil, hopefully on the rise for the first time in some period. Now we move over to Tesla. Your guess is as good as mine on this one. If I was going with what's the trend show, hey, it's negative. What could the market be doing? Well, it could be pushing a narrative to get it down underneath 194, taking out people's stop losses here. If it does rally, I would say it starts to find problems at around 234. And these are basically plus minus 7% moves. So really, you're kind of looking at these two scenarios coming out of whatever the earnings announcement is. And I think the opportunity for a lot of buyers will be kind of to see how it interacts with this zone should it come down there. And if the Model 2 does get announced, maybe something like this could be on the horizon. Is that a catalyst? What do you think? Do you think it's enough to get Tesla out of its current troubles? Because this stock has to perform now. It can't do bad numbers. The market wants to see it get the good numbers. Let's have a look at one of the weakest sectors coming down and finding some nice buys. And this was day 2 of us seeing clean energy and solar come back with a little bit of a vengeance. Now, it got brutally sold through the start of this year. You might think all markets are going up. As we know, that's totally not the way. There were so many stocks down, but there's so many at interesting support levels. So something like solar, Enphase, these types of stocks, they have found at least preliminary kind of support. Now we move over to Chinese stocks. And of course, the ratio that we were talking about before was based on the Hang Seng versus the S&P, a decade-long underperformance. But more importantly than that, a huge divergence between the two. Now, you could say, well, yes, everything's terrible. Don't get me wrong, it is. Of course, the news is not good. The earnings potential is maybe poor. But we do need to also put in perspective, a lot of these stocks are down 80 to 90% now in the market. So have they been brutally oversold? Yeah, they've been oversold like Great Depression kind of stocks usually get sold. So this is a pretty significant sell-off across the board. And you can see you're back in many ways at 2015 prices. In fact, I had a look at the Hang Seng Index, which we'll check out in a moment. That's back at 1996. In fact, let's have a look at it. You can see there that CQQQ went to the low. Check this out. You go back really in history, and you're looking at a price that was once reached in 1997. Wow. Now, was it in a bubble at that period? Yes, of course it was. But it does show you that sometimes when you put it in perspective, these markets are low. Now, what happened over the last 24 hours was potentially the beginning of a squeeze. And we saw some big volumes come in. We obviously see some snap-offs. And in some ways, this is the sign of a very fledgling potential recovery off these levels. Is it dangerous? Absolutely. From a technical level, it's only the first kind of miniature change. And it's really nothing a swing trader or investor would get excited about. But it is still a small change. What do you think? Is this the low of the year? Do you want to see trend lines or something like 17,250 getting broken up above? Or have you been trapped a few times from this market? It certainly has been brutal sell-offs for quite some time. But when the rallies do get in, they tend to be quite aggressive. So it's one we'll be watching on the channel for the next couple of weeks. Let's now move over to the German market. We know this is the most traded zone and where we expect bears to come back in if they're going to get in there. You'll notice I've straddled this. So we saw this rejection, which is nice. It shows you the bears have been on board the DAX. And did they push it low enough? No. It really didn't activate anything in particular. And I think one of the things here you're looking for is to get through 16,600. So this is the zone. Now, if German market gets above this level, it's probably going to squeeze higher. And that's because you could argue it's a massive flag. So yeah, the German market's at a pivotal point, and it's kind of similar to the Aussie market here, which is trading right at that range as well that you would expect sellers to come back through. We already know the US is being led by tech, so no surprises that it's doing different things to the rest of the world, but you can see the Australian market back at that resistance similar to the DAX as well. Now let's have a look at the Russell. So the Russell made a new high. That's a pretty good sign. and now it's pulling back, that's okay as well. I wouldn't mind it to pull back. I think getting back down to something like this red box of 1940 would be an interesting level for buyers. And to coincide that with like let's say a 4800, 4810, which we already know holds a whole bunch of potential option support as well for the stock market, at least initially, that would be a pretty interesting level. So certainly something we're looking at. Again, you're playing chess on the market. You're looking for different opportunities and looking for different technical potential. Now let's move over to the NASDAQ. So what's going on here? Almost a new all-time high. And of course, this is coming off a wick. Now, if we close above that, we're going to, you would think, squeeze. There will be people with stop losses sitting right behind this high, and they would get liquidated if the market obviously goes higher. I wouldn't try to go against this one right now. It's very, very difficult. Now let's move over to the US 500, which we've got here on the chart. And for some reason we had CSL, which is an Australian stock there. But anyway, we'll move over to the US 500. You can see here we've got multiple daily kind of highs coming through. At the moment, it looks like it wants to squeeze towards 4,900 and then potentially even get to that magical 5K narrative. Now, do I think we're still going to get mean reversion? Yes, I do. And eventually you always get it, which is back to the 20 weekly moving average. But unfortunately, in this case, once it got through 4,800, there was nothing much you could do. This last 70, 80 points, it's kind of inevitable once you start to get through these types of highs. So we're still watching. Obviously, prices are moving higher. Single stock rotation is doing really, really well. There's been plenty of different single stocks that have been going well. Certain stocks are starting to hit profit targets, such as NVIDIA with that 600 target hit. But yeah, we're getting into that twilight zone. So this is where everyone's going to start to get very complacent. And of course, you'll be wanting to look at price action. In particular, home build is probably the weakest sign across the board at this point. Now we move over to Bitcoin, speaking of weakness. And of course, this was, or looks like, a Wyckoff distribution. Now, markets sold off more aggressively. They didn't quite get down to two levels here, which I've put on the charts just for crypto traders to show some big levels that I think are important. And we're rallying back up. Now, does that mean we're out of the woods yet? Well, let's have a look at a small time frame here for Bitcoin. And you'll notice straight away we are pressuring this resistance. So small day traders are going to like the idea of this type of thing up to about 42K. Now, I think the bigger sellers will sit around 42K and 43K. These are the two levels that really the bears will be sitting at heavily. But for day traders that are looking for some reprieve after a big aggressive sell-off across the board, they're going to be looking for a breakout here of this 40,200 and then a little bit of a movement up here with potential sells here and potential sells here. I'd like to see this thing at least get down to around that 36,800 zone. What about the news for the week ahead? Well, of course, we still have some big stuff. Tesla, will they get the Model 2 out? ECB press conference Thursday at 8:45 a.m. New York time. And then, of course, we also have Friday core PCE price index. So there's a lot going on around the world right now. If you're interested in keeping on top of all of this, remember to subscribe and smash that like button. I hope you had a good start to the session this week, guys. And obviously, it's earnings now. So watch out for your favorite stocks that you might be in. There will be some big moves, as we just saw with Netflix. Bye for now.